When we take a look at the Johannesburg Stock Exchange, that was trading higher at midday today. The all-share index has gained 1% to 77,923. The industrial 25 index is 0.6% up. Financials have added 1%. When we look at markets in Europe, they are also firmer. Britain's FTSE 100 has added 0.25%. The CAC 40 in France just under 1% higher. And Germany's DAX has gained 0.5%. The rand is firmer against the major currencies, trading at 18 rand 29 to the dollar, 22 rand 75 to the pound sterling, and 19 rand 90 cents to the euro. When we take a look at commodities, gold trading at $2,002 an ounce, platinum at $1,006 per ounce, and a barrel of Brent crude oil costing $83.99. Let's get some analysis on this. Martin Smith is the portfolio manager at Anchor Capital. Thanks so much for your time, Martin. What led to that close of Wall Street higher, and what's happening today?
So I think, again, you pointed out quite nicely in the intro here, where the market was digesting those numbers from Friday, from the jobs numbers in the States, which were pretty much in line. I think any deviation one way or the other would have obviously led to a bit more of an kind of extreme up or down results on the day from the market. But again, relatively in line, which has kind of kept the market ticking along. Obviously, we've had quite a strong run in the last couple of weeks. We're still up about 10% year to date on that S&P. But again, it all comes back down to what happens tomorrow with those US CPI numbers. Obviously, very, very important, and we're incredibly kind of data sensitive at the moment. So again, all eyes on tomorrow afternoon.
Yeah, what do you think is going to happen with that inflation figure tomorrow?
So I'm hoping it comes down. And I think that's kind of what consensus is saying with regards to the headline number, which they think is going to come down from 6 to about 5.1. The core number is going to go up slightly from 5.5 to 5.6. So again, we're so sensitive at the moment. So I think any deviations from consensus might see some kind of market reaction. But that's what we're looking for. And I think the bulls will say, look, inflation is starting to roll over, while the bears are saying, look, it's still quite high.
Martin, if we go to Asia, we saw those markets tracking Wall Street's higher close. What's happening now? We saw that opening earlier on this morning. What's happening now?
Yeah, so most of Asian markets are looking positive. You mentioned the news around Warren Buffett looking to kind of add more Japanese exposure, which has been positive on that side. China down a little bit with regards to, I think, what seems to be the fact that you had a CPI miss from their side, which speaks to, and again, they've got a slightly different problem to what you have in the States, where in America, they're looking for the inflation number to come down. In China, they're hoping for it to go up a little bit as a sign of economic recovery and things reopening and that economy kind of kickstarting again. So that number was a little bit less than what people were hoping for. So maybe that speaks to kind of less demand. You also saw Tencent down about 3% this morning as well. So a little bit of a mixed result across the board there.
All right, let's come closer to home. We saw green boards on Thursday, kind of seeing a similar picture in mid-morning trade today. What's moving the markets in South Africa?
So I think a couple of things. One is you've got relatively positive global sentiment at the moment. Like I said, the US has been very strong in the last couple of weeks. And feeds into what's happening in South Africa. Ever since the sort of mini banking crisis seems to kind of, the fears around that seem to have dissolved. I think you've seen some positive risk appetite come through, and that's filtered from South Africa. But also quite a big kicker at the moment is the rand, which is back up to that kind of 1835, 1840 level, which has been very positive for rand hedges and obviously the commodity side of things.
Martin, let's stay with the rand. You know, there's always it feels like if you're watching the commentary, there's always a moment where people are like, oh no, this is happening with the rand, this is really bad, depending on where you sit. And then that level keeps on increasing. So 18 rand 50 yesterday, it's come down a little bit now, but what's happening there? And are we going to keep on seeing the rand moving closer and closer to the 19 to the US dollar mark?
Oh, I hope not, is my personal kind of hope. But I think you saw the rand strengthen on the back of that shock 50 basis point hike from the from the MPC a couple of weeks ago. So down to that 1770-ish level. It's quite a key technical level, that. But then we've seen the markets, or sorry, the rand kind of bounce back again to the 1835, 1840 level. So a couple of reasons for that. One, you've seen a stronger dollar in the last couple of trading sessions. So that's obviously impacted us. But I think you've also seen some South Africa-centric reasons come into play. And usually there isn't, we kind of track emerging market currencies quite closely. Every now and again, we kind of decouple from that, and you have some South Africa centric reasons for the rand weakening. And at the moment, I think there's a little bit of uncertainty around South Africa from a GDP perspective, from what's happening with our power perspective. And I think that's weighing a little bit on sentiment at the moment. So you've got that, as well as a stronger dollar, which has taken us back to this level. But I think fundamentally the rand is cheap at these levels. I'm hoping to see kind of 17, maybe 16.50 later this year. But again, it's largely a function of sentiment and then kind of how this power story in South Africa plays out.
All right, Martin, we do have a little bit of extra time. We're seeing, let's look at commodities quickly. Gold, over $2,000 an ounce for gold. Is that driven by people moving towards safe haven assets because of the panic that you were speaking about, even though there has been resolved in the banking sector, and just jitters around the world economy in general?
I think so. I mean, again, gold is always seen as a safe haven asset. You've seen a little bit of questions about the dollar, questions about what's going to happen with banks. You've obviously seen 3 big banks fold on the back of what's kind of higher interest rates. So I think there is a bit of natural kind of aversion to being in dollars itself, which is why you've seen gold prices increase. Again, safe haven assets. Do you believe in the long-term story? I'm not sure. But that's definitely, I think, one of the driving factors at the moment.
Martin Smith, Portfolio Manager at Anchor Capital, thanks so much for your time and analysis on SABC News this afternoon, taking a look at what's moving the markets locally and internationally.